We did 75 deals in our first year. So we were very successful very early on.
There is a very large margin when you do it right, but you need cash to do it right.
And so D.R. Horton was like, wait, why don't I just buy this right? So these companies will buy these acquisition engines.
There's no shortage in terms of creativity on how you can convince people to pay for it. All right, everybody. On today's show, we have Clay Hepler. Clay is the owner of Hepler Land Holdings. Hepler Land Holdings is a boutique land investment company that purchases vacant and developable farm, residential, recreational, and hunting land nationwide. Clay and his team partner with investors to generate returns through buying, subdividing, entitling, and selling vacant land all across the USA. Clay, welcome to CRE Insights.
Connor, man, I know you and I have been kind of connecting with each other from afar, so it's good to get on and jam with you here today.
Likewise. So we were talking before pressing record here on I am out of the land business. I used to run a land company myself for close to 3 years. Have since exited that amicably about a year ago at this point. But take me back to the origin story for you. How did you get into the dirt game? How did you get into land as an asset class when there are so many types out there?
So I actually was in a couple other asset classes. So when I got into real estate, which, man, it's 5-6 years ago at this point, I joined a company, a local company in my market, a guy that just had a couple hundred units, 400, 500 units, mom and pop guy, ran the whole ship himself. Because I was like, I want to get into real estate. At that point, I didn't really know exactly what I wanted to do with my life in general. And I was like, this is a great way to make money, right? Watching the Bigger Pockets podcast, listening to a lot of the influencers of that era, it's like real estate's the way to make money. And at that point, like, it was very easy on a relative basis to cash flow with residential property, right? And so I got into real estate, learned the real estate game from him. And when I was at that firm, I had a sales and marketing background. And so what I did was I built a wholesaling and house flipping company. So similar to what you did with the land business, he was sort of the cash partner, the capital partner, and had a little bit of strategy. And so I just went out there, full of piss and vinegar, and built this sales and marketing business through finding off market deals, right? Wholesaling, house flipping, wholetailing. We did 75 deals in our first year. So we were very successful very early on. And so I built a sales team, and the best deals were going to this guy, right? So he was cherry picking the best deals and flipping some other ones. And it was a really great way to learn. But I was like, man, I wanted to start buying my own properties, residential properties. So I bought a house hack, the first deal that I bought. And then I started to scale from there, buying a lot of BRRRRs, smaller multifamily properties, think 3 units, 6 units, 8, 10 unit buildings, buying them, improving them, refinancing. Now, this was all during the environment of very low interest rates. So BRRRRs were much easier. You can cash flow. Your debt service was really good. And so it was actually quite easy on a relative basis compared to what it is now.
Excellent backstory. Give me like a high level for somebody who's just getting involved in land business today. Like, what have been the hottest markets in 2024, and as far as states go to buy land in?
So I focus on a couple of states, and I can speak to my markets. There are some honey holes that I don't want to disclose, but I can I can talk through the thesis of the hot markets in 2024. Sure.
Yeah, I would love to hear it.
So I would say that that in the winter, your hot markets are going to be further in the south, right? And then in the summer, your hot markets are going to be basically at the Mason-Dixon or a little bit above, right? These sort of more vacation towns. Now, you might say, why is the South not hot all the whole time of the year? Well, in the summer, it's very hot, obviously, and you think that doesn't affect buyers, but it really does. So we find that June, July, and August, because we're very heavily in the South, are very slow for us. And it just takes us longer to move our inventory. But I mean, the markets that are really hot are, your Tennessees, your North Carolinas. California is actually a pretty, we're talking on a statewide basis. I can go down to county. Obviously, Texas is like the hot market. And, just states that people are moving to. Georgia is very hot. Although I would say that there's going to be a lot of liquidity sucked out of Georgia pretty quickly because there's some new laws pertaining to how to market to sellers. And I could talk about those in a little bit. But I think liquidity is going to be sucked out of the market to a certain extent because the land investors aren't going to be able to target a lot of these sellers soon.
What do those laws look like?
So in Georgia, I'm not an attorney, by the way. I don't pretend to be one.
Not legal advice.
Not legal advice at all, but um, there's a new law that is, and when you are a investor and you're marketing to a seller, when you're marketing to them via direct mail, you have to disclose on the outside of your direct mail piece that you're an investor. And you have to exclusively disclose that, right? And if you're a real estate broker, there's always ways around this. But what it does is it's illegal if you don't do that. Um, and so you can get sued and prosecuted if you're sending out mail in Georgia that does not exclusively disclose the fact that you're an investor.
Do you think that that would increase the efficiency of postcards over direct mail closed envelopes?
I think that either way, it's going to. I don't know how many land investors actually know this stuff because most land investors don't follow this stuff. But I think that it's going to cause a lot of people that do say, I don't even want to invest in the state. Most entrepreneurs are small entrepreneurs in this space, at least, are quite lazy. And they're just going to say, I don't even want to do this. Like, for example, South Carolina passed a law recently related to wholesaling, and wholesaling is now essentially you can't assign a contract. But there are very easy ways to get around that. You can do a land contract. You have to have truly equitable interest, and the only way to really establish that is through a land contract. And so most people are going to stop wholesaling. A lot of people are going to stop wholesaling, and then the professional operators will suck that, that the whole up. But I don't think it's going to replace it. That's what I'm saying. That's why I think that the liquidity of the Georgia market in maybe a couple of years, unless people really adapt, is going to be pulled out.
So is direct mail y'all's number one approach for finding off-market deals right now?
We are using some direct mail. We're using some cold calling and some other, we're testing other outbound lead sources. But recently with the TCPA laws that are coming out, it's just really dangerous, man. And I know one of the guys that there's a McMorrow versus Core Properties in St. Louis, which was earlier this year. And there was a big lawsuit that established case law pertaining to non-solicitation or solicitation via text messages with investors. And there was this gray area that existed before. Again, this is not legal counsel, but there was this gray area that existed before in which you could reach out to people if you essentially if you're buying someone's house, you weren't offering a service. And so you can live within this gray area that enabled you to reach out to them. But this is new case law that establishes and reestablishes the TCPA compliance for opt-in consent for any sort of outbound messaging. And people are still texting though. So
yeah, I was going to say, I know that. So when we were doing the land stuff, we never cold called, to be honest with you. We would cold call when we would get a lead. But all of those, I guess that's not really cold call because they're kind of opting in at that point. Direct mail was our number one, our bread and butter. But I know that obviously cold SMS has been working very well. And with the regulatory compliance of that, I can see that taking a big shift in how people are still sourcing deals. You mentioned the other day that you have an acquisition guy, and I think it might have gotten tagged by you on Twitter on using a US based acquisition guy versus a overseas acquisition guy. So what does your acquisition guy do? What's his day to day?
yeah. So the tweet for those that don't know is that I believe that my US based acquisition person is just would take the head off of any virtual assistant acquisitions person, which I do believe. And I mean his day to day, he's a closer. So our framework that we use in our business is a setter closer framework. So we have the first call is the qualification call, which is usually done depending on the lead source when the someone's coming into our business. But we'll have a setter go through a qualification call and set up a closing call with our acquisitions person. At this point, our acquisitions person is essentially following up with offers, offering on deals, and building relationships with realtors, and doing some underwriting, right? So underwriting more extensive, kind of more creative deals. He has full access to we have some proprietary underwriting software that enables us to like very quickly go through subdivisions and see like zoning regulations and things like that. And so he's using all that to source our deals.
But I think the specific tweet too is you were talking about they would do double, right, of what any other overseas person would do.
My US based guy does triple, but
Triple.
at this point he's at about like averaging like 3 to 375 a month
Nice.
in projected rev, which we can expect to close about 80-85% at this point of our rev, like of our deals. So it could be somewhere around three, just one person, right?
Yeah, that's
Um,
huge.
so that's in my virtual assistant used to be around when I had multiple virtual assistants in the role, like around like 80 to 130 a month.
I will say so. When we had the land business, we used to use all overseas guys. Um, we I didn't find them organically. I found one organically because I posted something online and then I got cold called by him. And I was like, oh, I want that guy on my team. I was like, this dude skip traced my number and cold called me. Like, yes, please join my team right now. All of the other people that we chose were like, dude, they were like Tableau data like experts, and their entire job was site selection for new mailers and new opportunities that we're going after. I stole them all from some other land business that I'm blanking on their name right now, but I went on LinkedIn and all of their overseas employees were on their LinkedIn, and I started DMing them there. I was like, how much money do you make with this company right now? They're like $7 an hour. I was like, fantastic. You will make 9 with me if you start next week. And they're like, yes, sir. And we took all their whole team like almost overnight. So that was we had like a pretty strong team from a data selection standpoint. And they were like, we had our outbound engine rocking and rolling, which was pretty cool. Um, but I think the thing that I learned about the land business, and I think something I want to spend some time talking about with you today is we probably have very different strategies as far as what we were doing in the space. So, our some of our best deals, I think we had 1 to 2 deals that had 6-figure spreads on them. But like the longest I ever want to hold like parcel is 90 days. If it goes past 90 days, we're effectively in a discount drop, like get rid of this thing, get it off the books type of mentality. I think when we were running the business, we had done 67 deals, I want to say it was, and we had lost money on one of them. That one we bought for 14. I think we sold it for 12. So we lost $2,000 on that deal. Everything else were total 2x, 3x, 4x, 5x home runs. And their average deal though, like I don't want to make it seem like we're just buying for 50, selling for 150 all the time. Like the typical deal that we would do would be a buy for 10 to $12,000 and sell for 35 to $40,000. Like that was very often the average deal. And the value add from that was truly coming from just marketing and knowing the area better. Like it was a lot of Texas, Florida, Nevada, some California, were the places that we were doing business in. You have a post that says land has value, but it's the trees that make you rich. What does that mean?
Well, this was a post that was talking about timber. So timber is one of the oldest industries, right? That in the United States, and the actual things on the land, that the higher level thing here is the things on the land are actually what make you wealthy, right? So like land, dirt, you can have dirt in the middle of the desert or dirt in the middle of the Appalachia, and it's not really inherently valuable. It's actually what's on that land, what the capacity of the land is. So if you say, hey, is land out in the middle of the Nevada valuable? You might say absolutely not. It's in the middle of the desert. There's no access to water. But if you said if it was right next to Caesar's Palace, you would say, oh yeah, it's inherently more valuable, right? Positioning, location, and what's on the land and what the land can actually create is really where the value is, which is why I love land investing. Land investing is one of in my opinion, the only asset class in real estate that you can take something, Connor, and you can make it into whatever you'd like to make it into. Like yourself, maybe you develop it into a self-storage facility. Maybe you develop it into a stadium, right? The Sphere in Las Vegas, right? That incredible stadium that's, the most immersive experience. That's what we can do with land. And so the value of land, the post was just pertaining to timber, right? But the actual value of land is what's on it and what you can do with it.
Do you have any experience? I know when I was in the land business more, a lot of people were talking about hunting grounds. Have you ever done anything like that?
So we have done stuff that we purchased a piece of land that had a hunting lease on it, and we sold the hunting lease and the land. But man, I mean, my business is boring, right? Like I find undervalued pieces of land. I try to find the highest and best use of that land, whether it's through subdivision, whether it's through building out a home site, kind of developing it in that way. But I'm not trying to do all these additional things, buying farmland, leasing it back. You can do that, but my business is pretty boring.
So then, at least from a subdivision standpoint, because that's the business that you want to get into more, it's buying these really large parcels and working with the local municipality to create a change in that parcel, essentially to kind of boil it down to simple thesis. Why is that so profitable? Why is subdividing that land so profitable?
Right. So, restaurants do this, right? They buy a bottle of liquor down at the liquor store and they sell it to you by the shot. Why is why is there so much margin in alcohol? Well, it's because you buy something on a whole basis and it's a wholesale, right? It's less expensive, right? Than if you have it in a more accessible format. And that's the same exact thing that we're doing with subdivision. What the reason why these 600 or 6,000 acre or 6,000 square feet, 10,000 square feet, 15,000 square feet lot are so valuable to DR Horton is because they can put more houses on these lots, right? My experience at this point is like minor subdivision. So we're buying a piece of land that's 20 acres, has a bunch of road frontage on it. We're cutting it up into about 10 parcels. So there's going to be 2 acre parcels here. We're buying it for about 200,000, right? Or I'm sorry, we're buying it for about 100,000 and we're going to sell it for about 250,000, right? So we're doubling our money by cutting this thing up. Why is it so much more valuable? Because the end buyer that's looking for 20 acres is very different than the person who's looking for two. The profile is I'm a hunter. I'm purchasing this maybe to have build a farm, like a little farmlet. And so the amount of people that can purchase and afford a larger parcel is less. And so inherently the market corrects to that. And so the value per acre is lower. It's less accessible, right? And so these smaller parcels are more expensive because they're more accessible. They're more affordable, right? You find in the land business a 1 acre and a 3 acre could be the same exact value in some of these areas because you're going to put a house on it, right? If it's basically the same type of parcel, it might sell for 50,000. 1 acre might sell for 50, and 3 acres might sell for 50 because you can build the same exact thing on it. And that's exactly what we're doing when we're doing subdivision. So we do minor subdivision, which is a very different thing than major subdivision. A lot of times, minor doesn't require a zoning approval, replatting, different types of utilities, sewer lines, those types of utilities. Usually you can do a septic tank or a well and not replat it, just do a new survey, go down to the courthouse and say, hey, this is exactly how this parcel is going to be split up currently. That's what we focus on now. And the value there is actually creating a new housing stock in that community. And so people want to put their mobile home that they can afford on a $50,000 lot, and they can't afford the $150,000, $100,000 lot. And so that's why we really can force a lot of value because we are creating more density through cutting these parcels up.
That makes complete sense to me. I like the liquor store example. Um, it sounds like for some of the deals that you're doing so far, it's been your cash, investors' equity, maybe a little bit of bank debt here and there. Have you had any experience with creative financing when buying some of these land deals?
Yeah, so we're starting to pitch that more and more. I think it's a good, it particularly for the people that own a lot of these properties. We are pitching creative financing, owner financing, and then selling the properties owner financing on the back end. But I've only done like 3 deals like that, and they were all smaller lots. So we purchased a property owner financing for $10,000. So we were just going to pay this person like $250 a month and no money down, and we were going to manage the closing costs. And so we thought that we could sell it for about $30,000. And so we said, hey, you got to put $15,000 down. We get our basis out, and then we owner finance it, right? That's an example of what we do. We also owner finance on the dispo side. So I bought a 6 acre parcel and I bought it for about 42,000. I sold one of the parcels for 39,000 got almost all my basis back, and then two of the other parcels we're selling on owner financing terms with 30% down, and so we'll get our entire basis back and then get that cash flow from the owner financing. So a lot of times we're finding that the dispo is more attractive for the owner financing, but to be fair, I don't know how well I can pitch it yet. And I think it's one of the things that we're really working on to pitch these things better, like trying to pitch development parcels, like having the seller stay in so we can get it at a more attractive basis so they have an upside. So we're working on for these larger acquisitions to say, hey, we'll create a special purpose entity, have you sell stay in, we'll agree upon a price. Maybe it's 500,000, and then you'll get a certain percentage of the upside. So that actually reduces our risk quite significantly in our exposure, our capital exposure in those deals.
That's great, man. Yeah, I know. And then the fun part about real estate is that while you're just selling land or just selling properties on that land, there's no shortage in terms of creativity on how you can convince people to pay for it, which gets to be the fun part of this game, especially on the deal side, which sounds like you're enjoying as well. Um, how old are you today?
I'm 27.
Hell yeah! All right, cool. Me too. I think like definitely very ambitious for your age, and I think the fact that you're doing all of this right now, it's cool to see you become an expert at something as complex as subdividing out parcels or working through easements on lots or wetland migration or anything like that, right? What is your goal here long term with this business? Is it you want to own the most, like go the Ted Turner route and own the most land in America? Do you want to create this huge land development company? Do you eventually want to parlay all of this into a different asset class? Like, what's the dream for you that looking back on this video 10 years from now, if you heard your answer, you'd be like, oh yeah, cool, I did it.
Yeah, I want to be one of the largest, if not the large, land development companies. Not developing vertical, but actually developing rezoning of parcels and selling the parcels in America.
That's a good goal. Who is that number one right now? Have you done the research?
So basically, there's a company that D.R. Horton bought. It's called the Forrester Group. So
Okay.
basically, they bought the acquisition arm. Like this group was the person that was doing what I do, and they were selling their lots to D.R. Horton essentially. And so D.R. Horton was like, wait, why don't I just buy this right? So these
Yeah.
companies will buy these acquisition engines. It had other things that it was doing, but that was one. They're one of the biggest ones. But the problem is, man, like a lot of these companies are private, so there are very large companies. Like I know one, BRZ or BRD Land, and they're very active. Um, you know, 50,000 lots that they're bringing to market type of deal. And but they're vets in the space. Like the president's been in the space for like 25 years. All these guys are like ex D.R. Horton land guys or ex Lennar land guys or Toll Brothers land guys, and they come and they say, I know exactly how this business works. And so I'm coming in as an outsider, not having that experience. And but that would be the aspiration. That's the goal of where I want to go, because you can do anything with that, right? If you know how to find undervalued land, and not even undervalued, like at market value, we can pay market value. So we're not undercutting the market in that way. And then create housing, create opportunities, create developments through the acquisition of that land. That's so exciting. There was a piece of land that was, I forget the exact number, but it was right in Hong Kong. Like Hong Kong real estate's like some of the most expensive real estate in the world. And it sold for like multiple billions of dollars, like a little parcel, like an infill lot on the bay. And those types of deals would be so interesting to be a part of, like helping put together the end buyer, which was the developer, Hong Kong developer, and the landowner. So you're almost like an agent, but you're the person that's taking it to, this is what we can do with this parcel, and giving it on a silver platter to a developer. That's really exciting, man.
Yeah, the only limit there is your imagination and your ability to get things done zoning wise, which is really cool. Clay, this has been an awesome episode. I feel like people can walk away from this confidently understanding like how to make money out of land alone right now. If people want to check out what you're working on, if people want to get involved in future deals that you're putting together, where can they check you out?
The place that all of the world's problems are solved, Twitter, X, right? I'm very active on X. Connor and I exchange likes and comments and stuff on X. So I'm really active on X. Not really that active on most other channels. Instagram, LinkedIn, I'm kind of active on, but X, I'm very active. And then I have a website, land-man.io, which is kind of the branded, the podcast and newsletter. And then just DM me. I'm very open to talking to people about this. And whether you're a passive investor, an active person interested in getting involved in land, or thinking about maybe this could be a good way for me to build some equity, some wealth, some cash flow, feel free to reach out to me on any of those platforms. I'd be happy to discuss it with you.
Thank you for coming on today's show, Clay.
It was a pleasure to be on, man. Have a good one.